is Chen Lin. Today I'm trying to discuss how do we invest in this new environment. We had COVID-19 pandemic and also the new Cold War starting between United States and China. So this is a disclaimer. It's basically say this is for entertainment purpose only. So you take buy and sell stock at your own risk. So this is the latest about COVID-19. And I put it at, you look at the worldwide and the United States. Unfortunately, it's not a very pretty picture. Okay, if you look at there's a China, start from China and then goes throughout Asia, Europe, and come back to United States, North America, South America, now Africa is in trouble. Particularly in America, recently, they have a surge of cases in the South, now started going to the Midwest. So situation is getting worse as we are speaking. So I live in New Jersey, and then we are very afraid about a second wave in the next month or two. Because when New Jersey was the second worst state in the United States when they hit New York. And now it's coming down. But there's a lot of fear that will come back again in a couple of months when the kids going back to school. So this is a key. Okay, I got so many questions lately about gold and silver. Why gold is going up so much, so fast? There's a lot of investors that I want to buy. I try to chase, and then it just go up. I miss by a penny, and next day it's go up a lot. So why is this gold is going up so much? And then you can see from the Federal Reserve balance sheet. Okay, on the top, it's a 20-year chart. Okay, and you can compare now versus 2008. At the beginning, as you can see, there was 2008. There is a big bump on 2008. Same thing is happening here. It's much bigger. And there's all the people saying, oh, the Federal Reserve's balance sheet start to shrink a little bit. But if you look carefully, on 2008, it went down again as well, but eventually it will continue to go up and up. So this will likely be the trajectory given the COVID-19 is such a tough virus, and there's still spreading throughout the United States. Another thing is if you look at the stimulus, right? Europe has a stimulus of 750 million euro, and the United States, the last stimulus was 3 trillion, and this stimulus they're still negotiating. I know it will be between 1 trillion to 3 trillion. So the United States is sending a lot more money to the public than any country in the world. So that's lead to the next chart. This is if you invest in gold in any hard assets, this is probably the best chart and the most important chart you should look into. So the first is a gold chart. It's dollar chart, right? And then you can see one is a shorter term, one is a longer term. Okay, on the long term, we are going to retest the low of the dollar around 2018. Okay, in the short term, it's already broke down the year low, and it's continually going down. The reason is, as I discussed before, there's a rapid buildup of Federal Reserve balance sheet and a rapid handout of stimulus in the United States. So if people ask how high gold can go, you should ask yourself how low the dollar can go, right? That will give you the answer. And then from this chart, you can see there's no bottom inside. Once a US dollar breaks this area, which is about 90 area, so that's a 2018 low, it can go much lower. Okay, sorry. This one, okay. So in the meantime, a new Cold War is starting. Okay, this is from the Deutsche Bank. slide. It's called New Tech Cold War, the basic technology Cold War. I hope it's remain at technology front, remain a Cold War, because there are also a risk it can go, warmer. There's a very strong rumor that in Asia, that United States may bomb one of the islands that China claims sovereignty, but there's nobody live there, so nobody will get killed by this. It's a statement of United States the stand. But if you remember, the first World War I started when nobody thought it could start, but it just happened. So that's my worry. Okay, this is a very interesting slide. You can compare this with what the current situation. Okay, so what they put all the different incidents together, and then there's a big spike. That's when the Berlin Wall got constructed. And if I see now, it could be United States bomb China's, the one of the island in the South China Sea. That could be. So this is where we are now, and then there could be tensions ahead of the U.S. election, right? We're less than 3 months away, and then President Trump is behind. So one of the way to get, increase his standing is get tough to China. So next slide. Okay, so let's continue our thesis. This is a tech war, right? It's a technology war. So this is a diagram you see about all the STEM, all these science, technology, and engineering, mathematics graduate around the world. This is a few years ago, but give you a similar idea. So you see, that's part of it. China has so many technology, from Huawei to TikTok, from other, become very successful. Part of it because China has a lot of engineering graduate, and United States is at much less, right? Almost 10 times difference. And if you think it's a technology war between United States and China, this is your army. So that's the thing I feel pretty strongly. If United States want to win the tech Cold War, you need to be more open. Invite all these engineers from the war to come to United States to build a technology platform, from India, from Russia, even from China. Okay, so especially in West Coast, I've been hearing there's a lot of shortage for good engineers. So those engineers should be, it's a soldier in the new Cold War. So that's very important. So this is just a different company. You can see had China and the United States almost even, at the battleground. So, and also I mentioned a little bit about Xi. People say, oh, he's become a dictator. Unfortunately, he is. Why he came to the power in China? Okay, you understand from the China's perspective, he witnessed when he came to power, he have a very strong, sharp rise, of the support of the government, because he was trying to rule out all these corruptions while he accumulated a lot of power. So now he's more like a Putin in China, the new Putin. So anyway, so this is I want to give an outlook, okay, of this Cold War. So for me, I'm Chinese. I came to the United States more than 30 years ago. Historically, the Chinese empire usually lasts for a very long time. Okay, they collapse only by 2 ways. One is internal corruption, one is foreign invasion. Okay, so that's the thing you want to think about, where the Cold War lead to us, and then what's going to happen. Okay, so if there's just a technology Cold War, I expect this lasts for a pretty long time. And then, as you see in the Cold War between the United States and Soviet Union, we have a rapid inflation. Okay, and then while all these lot of things unstable, and gold was going through the roof in the 70s. So this may come back play out in the next decade. another possibility is that the Cold War got hot, okay, but then you're talking about a naval blockade against China, but what will China respond? I hope, again, I hope there's a peaceful solution around the world. I don't want to see anything, especially two nuclear power getting at war to each other. Cold War, I don't like Cold War either, but Cold War is a little bit better than hot war. So this is very important. This, what I believe, if we continue this path, this new Cold War can drag for decades, and then US dollar will be the victim. Okay, and then the country who benefit the most will be Germany, Japan, Vietnam, all the other countries. Okay, then you think about that's very similar to the Cold War. Okay, so and then that's what implication to gold and other hard asset. Okay, this is just my about less than a year ago, my prediction at the Metal Investment Forum, and so far everything's on track, except the Fed cut much more interest rate because we had the pandemic. At that time, nobody saw, nobody can see that, but most of the thesis was intact, and gold is doing great. So this, again, this is my investment philosophy. I feel there's, in the junior, there's too much pump and dump in this juniors market. And there's all this money chasing. Lot of those trades are the zero-sum game. So you need to be very, very careful about getting into some kind of zero-sum game situation. And I personally, I make money, I like the old-fashioned way. I like to find the value, want to create value, and then create money, create dividend, create that value to the shareholders. Okay, so that's my investment philosophy. So, and then we're talking about how to invest. So you need to take a very calculated risk. Okay, you try to, so that instead of going to gambling in Vegas, you play the house. Okay, so you have more, more wins. You have a lot of losses too, but you have more wins and losses and going better forward. And then also we want to see the better future for the world. So the hedging, that's a very important. I got a lot of people ask me, how did you do well in 2008? Well, I hedged in 2008. Did you hedge in 2020? This, I hedged a little bit. I shorted the palladium, not too much, but was good. But I was able, mostly I was buying silver when it was hit $12. If you remember at that time, people thought gold will test 1,000, silver will go to single digit. And I put it there, I think silver, $12 seems to be a very good place. I tried to test a few, went down to 11 and bounced back around 12 for quite some time. I said, okay, I'll put a bet in. So I mostly am buying, and then I have a different sector that buying gold, mostly the precious metal and biotech, COVID-related stuff this year. So both are doing extremely well. I'm very lucky about that. So, so the good thing about different sector is one sector can move each sector move at different speed. Okay, actually, for me, the COVID stuff went up first, and then very dramatically. So I was able to take some profit and then put into more gold. And now gold is taking off. So it's so far has been a very good year. So this is the strategy for the year. Okay, so one of the key, everybody thinks the job market is so bad. People are so bearish. Why stock market continue to go up? And then a lot of investors ask me, oh, I want to invest in gold. Gold just keep going up. They're not, yesterday I missed by a penny, and then today I had to pay a lot more. And then just go up like this. So why is that? There's a $5 trillion on the sideline, approximately $5 trillion, thanks to the massive money printing by the Federal Reserve. Okay, so that's actually driven the stock market. So we also have a lot of election uncertainty. This is coming. We are having, in 3 months we're having election. Okay, so that there is that's a big uncertainty. And another is if we're going to have vaccine before the election or most likely after election, that will trigger another round of rush to trash. Okay, all the trash stock, everything economy related goes up like crazy. And the US-China escalation, I believe before the election, it's very likely we have escalations in US-China relationship. And that's actually also drive gold higher as we discussed. So far we have been, me and my subscriber have a very good success in gold and COVID trade. And I have been booking COVID, as I said, COVID stock, and I've been putting the gold, also have some dry powder just in case. There will be some very dramatic swing before the election, okay? Either we have a vaccine or some kind of bombing, for example, we mentioned the US-China escalation or something. There will be a market can swing like crazy. So if you have some dry powder, prepare to use the emotion to either buy or sell at either direction, because, fasten your seatbelt, we'll have a rocky ride coming. So this is the gold. Let me try to go through this. And then people are asking, where gold is heading. Okay, so gold hit all-time high. No, gold, if you look at the inflation, the gold all-time high about 2,800. I fully expect that to hit this year. So if you think gold is going up, I think one of the things is stop guessing. Okay, where to buy, where to sell. I just one strategy which I use in the past bull market, just buy the position and then just ride it. Okay, so I use future position, but there's also ETF. There's so many other things, many others, right? And then there's a gold seasonality. That's a very interesting thing because every time we talk about gold should weak in the summer, okay, and then they start running in September, but it was wrong last year, and it's wrong again this year. Why is that? Well, this is a chart I said it's Chinese research, so there's some Chinese chart, but to tell you exactly what it is this year, gold is trading at big discount from Shanghai versus New York. Why? People in Asia are selling gold. Okay, people need their stimulus in Asia, including China, is very, very low. People need money to need to buy bread. Okay, you can see here, you have a $60 discount. Just early this week, when gold broke 2,000, the discount was almost 100. Shocking it is. Okay, so people in Asia hasn't wake up yet. They are selling gold. And then they're both buying in the United States. That's why there's no seasonality this year. Okay, it's complete opposite normal seasonality. Because usually gold seasonality starts September. You're talking about Indian holiday. India is in COVID-19 pandemic. Looking at the Christmas, Chinese New Year. Those are big gold buying events. Those are physical buying, but it's not happening. So mostly gold driven by investor. So forget about seasonality this year. And then we'll look at silver. Silver actually is a little bit old. We're all over here now. So, and I think this is a great chart, great carbon handle. It's going much higher from here. One possibility we're thinking, if gold go to 2,800, silver can possibly hit 50. Okay, that's some kind of idea. That's I'm thinking. Again, it depends on a lot of different factors. All the geopolitics this year. So this is a base metal, copper and zinc. You can see copper already higher than before the pandemic. Zinc is covered very nicely. That's very nice for a lot of gold miner. We were going to talk about. They have a byproduct with copper or some exploration copper in the gold project. So I'm almost running out of time. So this is a year, just a summary. So everything goes pretty smoothly. I was very happy that I was buying gold and silver at the very bottom. I took a lot of risk because at that time a lot of people are very, very scared. My reason at that time was this is different than 2008 because money printing from the Fed was just unbelievable. So, and I was very lucky to be right. And then again, remember, most buying is from US, EU right now. India and China really hasn't wake up yet. When they wake up, they probably will buy the gold from much higher from us, okay, at higher price. So as for gold miners, it's a stock pickers market. And I usually, you can go to my website, chenpicks.com, usually buy, hold, and trade.